Hello traders, today is September the 23rd. My name is Neville Hornsey, market analyst with YouTrading, and today I'm talking about the British pound versus US dollar. So as always, you can start with the heat map on the YouTrading.com website, and you can see here that the British pound is now green across the board apart from against the Canadian dollar and the New Zealand dollar. If you look to the bottom left-hand corner, the commodity pairs have been risk on today, and we did have the sort of risk off sentiment in the yen and the Swissy. So currently, British pound is strengthening against most of the majors. We go to the active trader platform and then go to the sentiment indicator. If we look down here, you've got 65% of the traders on this platform are actually bullish the pound versus US dollar. And usually as this sort of extreme reading gets higher, I start to look for reasons to go against it because generally it's a contrarian indicator. But for now, I'm actually thinking that for the next maybe 100, 150 pips, I'm going to join along. If we look to the euro versus the pound, we can see that we've recently just had a big drop off in the last couple of hours, well, since the start of the London Open today. So the euro is weakening and the pound is getting higher. So returning back to the pound versus US dollar, I've got an Ichimoku cloud here just to sort of highlight how support and resistance may come in a short while. Generally, break through the green cloud and then we're in a bearish trend. As you can see here, the red cloud becomes resistance. And then as you break out, then the green cloud becomes support. So I'm expecting to find some resistance up in this red cloud eventually when we get there. But if we look left, we've got a swing high, swing low, lower swing high here. And so I'm thinking that this sort of pivot line, where this swing low was, double bottom, I think that's where we find resistance, what the level we find resistance at, which is going to be around the 1.375. And by the time we get there, it'll probably be quite close to this red cloud as well. Right, if I just drag over what's made the pound rise today. Today we had the monetary policy summary from the Bank of England. Now I'll just look at my calendar. So last month we had 8 members voting, and this month we have 9. So we've added, the missing member back in, and the expectations were for 8 of the members to vote for a hold on the asset purchase facility, with 1 to dissent. But in actual fact, we've got 2 looking for a taper and 7 to hold. So a slightly more hawkish MPC meeting. So just going to start with the actual statement. It says the Bank of England's Monetary Policy Committee sets monetary policy to meet the 2% inflation target and in a way that helps to sustain growth and employment. So pretty similar to the FOMC. They're looking for price to be stable, and they want inflation around 2%, and they want employment to be maximized. So the MPC voted unanimously to maintain the bank rate at 0.1%. That was expected. And last night, you'll maybe remember the FOMC also kept their policy rate unchanged. And then the committee voted unanimously for the Bank of England to maintain the stock of sterling non-financial investment grade corporate bond purchases, so financed by the issuance of central bank reserves at 20 billion. The committee voted by a majority of 7-2 for the Bank of England to continue with its existing programme of UK government bond purchases financed by the issuance of central bank reserves. So again, they create these central bank reserves, they go into the banking sort of sector, and they swap out the tier 1 collateral, and they swap it for these bank reserves. So they maintain the target for the stock of these government bond purchases at 875 billion. But as I said, 2 people have now said, this needs to end. So that's slightly more hawkish. They go on to talk about how the coronavirus is going to abate with the vaccinations, and Yeah. Momentum appears to have picked up in services-orientated sectors where output remains well below pre-COVID levels, though. So they're looking for that to adjust. And the labour force survey unemployment rate fell to 4.6% in the 3 months to July, and slightly below the August report forecast. So, employment's moving the right way. 12-month CPI inflation rose from 2% in July to 3.2% in August. So they're actually running a slightly overheated economy at the moment. And I guess that's why so much focus is on the tapering. They want to see that they're going to start reducing the taper, which will then have an effect of like giving the short-term interest rates a slight lift. It means that they don't actually have to go into a rate hike cycle. So since the August MPC meeting, the pace of recovery of global activity has showed signs of slowing, hence why they haven't actually started to taper. They're still worried about the rest of the globe. But against a backdrop of robust goods demand and continuing supply constraints, global inflationary pressures have remained strong, and there are some signs that cost pressures may prove more persistent. So they are going to have to maintain a watchful eye over the inflation. They don't want that to just continually run on. So currently in a sort of bear trend rally, as far as I'm concerned, I'm looking for resistance to come in at these swing lows, like I said. There is this green candle here from the 17th of September, 2021. This is a 4-hourly chart, and that was the last green candle before this big sell-off. So I'm thinking those guys there that, broke down this swing low, retested, they're the last of the buyers. A lot of selling was obviously in that candle. As we saw, the result was this big sell-off. So there might be a chance we get up to the 1.38, test this supply zone here. If there are still sellers, that's when the resistance takes sort of control and we come back down. There is a slight balance area here, but this is a pivot area where it was resistance, became support, broke through quite cleanly. So this is my first target where I want to see a bearish reaction, like a swing high to be formed, and then a continuation lower. And if that happens, then we come and test this, larger double bottom. Or if the US dollar was to decrease, maybe go back towards $90, that's when we sort of see a break above this red line, get above this swing high, and then we can start trading above what will then become a like a scenario like here where we're above the cloud, above price action, and then we continue and then form a green cloud. So that's kind of what I'm looking for. I'm looking for a reaction at the 1.375 and then another reaction at 1.38 if we get through there. And if I don't see a bearish reaction, then I'm going to wait for a breakout, retest, continuation for a higher high. Okay, that's it for today. I'll speak to you tomorrow.